Yeah, only one thing when it comes to marketing and Web3. The main point is that the main leverage that is used by Web3 companies, it's about getting reach. It is one of the the easiest one to be leveraged. And it's also creating a big bias because people are judging much more about the price instead of the instead of the usability. That's the reason why we are seeing something that is completely unusable, but the token is pumping and everyone is using, it's buying more than using, because using it's another story. On the whole story with airdrops and so on, that's pretty powerful. But yeah, there is still too much focus on the speculation side, and that's also something that is also an obstacle when you try to push on corporate institutional adoption. Because the moment when you talk to them, it's something that they are thinking, yes, but from what I learned, from what I heard, blockchain is too much about speculation, or what you are really offering to me, what's about. So I think that, yeah, there is too much when it comes to marketing, too much shilling, too much literally trying to speculate on the price and just become rich. This is an industry that can literally change the world, but we need much more about real marketing, real communication, real education. The main voices of this industry are still people that are just trying to make money, but in money just selling something on someone else that will buy it, but it's just about trading. There is no real value creation.
Yeah, I'll say this. I think Discord and community marketing was not a thing before Web3. I mean, Discord was a thing, obviously gamers used it, but the Discord we know today is the Discord because of Web3. Community marketing we know today as a thing is because of Web3. It simply didn't exist before. And I think this is something incredible that Web3 has uncovered as an industry, as a group of people, is how important it is to build in public, how important it is to share those ideas early on. Twitter, X, the Web3 is obviously a crazy place, but such a loving place, such an accepting place, at the same time full of hate. Like it's super vibrant and it's so unique. And I don't think that we haven't seen this before with the dot-com bubbles, with all of the tech stuff going on before. I think we haven't seen this sort of how do you call this? When there's a war going on and like everybody's standing up to protect their whatever. I mean, there's a word for it, right? Can't think of it. Yeah, I think I made my point across. I think it's special.
Yeah, I've been thinking about our discussion here. So I think we can all agree upon the fact that AI can be a selling point for Web3 projects to sell their product more efficient while a new bull run or something. Is that correct? We can agree. Everybody can agree on. So
absolutely.
Yeah. So what I've been thinking is that Web3 space actually is super changing place where a month ago thing can be outdated right away. So do the developers have the time to actually build a solid AI base before it's outdated? Not to mention the BTC halving that's coming in 2024. So do they still have time to build something solid to offer to the public while it's not too late?
I don't think the tech stack exists today. I don't think we have a formed AI tech stack, and it's easy to see with kind of employment difficulties HR specialists are facing right now. We see a lot of design agencies, a bunch of those niche industries trying to hire AI specialists for generative AI illustration. Same in the writing industry. And the tech stack is not there because you have one person using a tool that will go bankrupt in a month and they need to figure out a different tool, and there's a new LLM and there's a new and it never ends. The tech stack hasn't been defined yet, and I think it's a huge problem and probably one of the biggest bottlenecks in everything that has to do with early stage adoption of AI, generative AI, and so on.
Mm-hmm. And in your opinion, Tyler, what do you think?
Yeah, I think we're just talking about the AI and Web3 aspect. And I think even going back to our other question, when you were talking about marketing and content generation and that, I think you'll start to see a lot more of that come into play. And I think that will have a larger play as well on investment. And then also on resources in which a company will be able to do, instead of having to have, 10 content writers or 4 social media managers, a lot of that can be utilized by AI. And a lot of that already is being done. I think you can look at maybe kind of what Galaxy, I know they have a Galaxy that has like all the quests for different Web3 global brands. I know they're coming out with a new AI component within their company. And I think you'll start to, and something I've already started looking into is running social media campaigns on behalf of companies and everything through utilizing AI. And then, bots are pretty much AI in themselves as well. And that's what a lot of companies use already to gain traction and attention. So I think it is necessary, and I think it will cut out a lot of extra meaningful time that maybe is not resourceful, and allow people to really focus more on the development of projects as well, while still getting their voice and brand out there.
Interestingly, when you're talking about the convergence of AI and blockchain, one of the things I see coming down the pipeline, even though it's not really being talked about, is once we get to the point of having our own local AI, and when I mean local, I mean like the Hale family AI, for example.
Yep.
An AI could very easily make blockchain friendly to the normal user. That's something that blockchain developers hanging out in their parents' basement have not been able to do. Blockchain is not friendly to the end user. And, you look at projects like Near and Sweat. Sweatcoin sees an incredible amount of users monthly, but Near pays all the gas fees for them for the Near blockchain. So it's not like growing the Near ecosystem. They're hoping to leverage that, but they're not. Why? Because blockchain's not friendly. And no matter how much people talk about blockchain being more friendly today than it was a year ago, it's friendly to tech heads like myself. I'm comfortable with it, but I'm also a nerd, right? And I'm very comfortable in my nerddom, but AI has a very real, distinct possibility of saying, hey, AI, go to my wallet and buy me this NFT because I think it's cool. And we're not there yet, but we're so much closer with AI making blockchain friendly than developers making blockchain friendly. And nobody's talking about it yet.
100% agree.
Yeah, that's a good point, actually. But at the same time, if you program AI in a bad way, it can totally disrupt a blockchain people relationship. So you can make it way worse and biased than ever before, because human factors should be there as well, tuning, so to say.
I disagree with that, actually, Ivan. I think what Joshua is saying is that our understanding of ideal user experience is going to be reformed, is going to be revitalized. The access to what we consider to be good user experience is shaped by limited amount of factors today. It's the data we receive, it's and the way we understand this data. With AI, and don't think just chatbots, it's not just taking out your phone and saying, hey, buy me an NFT. It's not just those functions, it's everything that happens in between. You know what I mean? And I think that's freaking amazing. And in that regard, I think AI is much more of that organizational, of that orchestrational, of that instrumental backbone play here, for sure.
Oh yeah, that makes sense, actually. Okay, but the next thing that's been popping in my mind, so these things obviously will meet regulatory environments and stuff, and talks about regulations. So how this will impact funding strategies for AI and blockchain startups.
I got the lawyer answer.
Okay,
the lawyer answer is you go to the regulatory environment that makes the most sense for your business. And right now, for example, with blockchain, that obviously is not the United States because of a plethora of reasons. That's why I think AI is exploding right now, is because, well, it's not blockchain, but, right? And I think you're going to see the same thing in AI or whatever the subsequent technology is. And you're going to see people go to the jurisdiction that makes the most sense, and you're going to see investments go there as well. Dubai is a huge area for blockchain right now. Why? Because they're friendly to it. And you're going to see the same thing happen in AI. Now, with that being said, the regulatory framework is always going to backdate or be after the new technology. We're never going to be able to get government to stay ahead of technology. That's just not what government does. So you still end up going to the government that's being keeping up with the Joneses, doing as the best they know how in as quick of a manner as possible. There's some governments out there that are very comfortable in blockchain. Marshall Islands comes to mind. They've spent a lot of time with several projects out there to try to keep their government framework current. Same thing with Dubai and UAE and even some of the other Emirates. That doesn't say that this is the right place for your project, but it is saying that you're going to always go to the place that makes the most sense, that's going to make you the most money.
And
I agree with you.
Okay.
Yeah, go ahead. Sorry. No, I was just going to add much. I'm sitting here in Washington, D.C. right now.
I'm just making sure. So
from my
in regards
perspective,
to the US, the technology pace is way too fast that they aren't, slow with these regulations, or it's just the matter of the US regulations like tradition?
I think part of it's tradition. I think, tradition in holding power obviously comes a lot to it. What does Wall Street want? I think is another big aspect of it. I think it's quite difficult here. Obviously, it's completely overregulated in my perception. There are some political parties that are obviously trying to change things here in the US. I guess maybe waiting to see what happens next year, end of 2024, but still a long ways away. And I think you'll find the same thing with what's happened with blockchain and Web3, the same as with AI over the next. I think we'll be having this argument probably in 2025 of why the expansion of all the companies are leaving the US that are in AI to other countries. That would probably be in 2025, just because the regulation has not moved fast enough, or will not move fast enough to keep up with the speed of the technology advancements within AI.
Okay, and what can you say about that, Alberto, in regards to Europe, for example?
Well, I don't know much about Europe because I'm living in Singapore, but what I can tell you about Singapore is, for example, it is a paradox. Because the paradox is that it's pretty friendly from one side if you want to incorporate here, if you want to put your headquarters here, and it's super fine. They have a couple of regulatory frameworks, good, bad, well, better than many other places. But on the other side, for example, when it comes to blockchain, retailers are bound to use their own tech. So the beauty is that you can build something here, but I'm not supposed to use it. So it's like a paradox. Obviously, the end of the story, Singapore is like a 6 million country. So who cares? That's not your market. But anyway, as Joshua was saying, it's perfectly right. At the end of the story, you will move where the framework is more friendly to what you do. And at the same time, this kind of technology is evolving so fast that at the end of the story, you can, obviously, it depends what is your business. If it is something that is for institution and you need to be compliant, obviously you need to follow what is the framework that you need. But many other cases, you can simply go on, experiment, and the framework will come later on and you will adapt to that. Obviously, knowing the risk, knowing the cost, but as always, we have seen also in the Web3 space, many companies paying billions of fines. That's super fine at the end of the story. They paying, but they got a lot. They are right at a certain point, a certain threshold, they are meaningful. So let's start becoming meaningful. When we reach that kind of step, we will think about how to deal with that. Obviously, that's something that can apply to any kind of business because each of them has its own peculiarities. But generally speaking, this is what it is. Connected to what you were saying previously about AI, Web3, and so on, I think we are literally in front of something that we have never seen because blockchain, when I'm thinking to AI and blockchain, I'm seeing blockchain like the petrol, like the oil for an engine that is the AI. AI, in order to be better, needs more data. And data, it is something that can be provided by a blockchain in different ways that can make it accessible in a way that previously was impossible, different because we can unify different databases, we can change the way that we are dealing with data. So that's a big revolution. And the next step forward is what will happen when we also have like quantum computing and so on. So we have three big things that are going on right now. We don't know how long it will take to make them mature and to literally be able to go for a mass market. But what we know is that these three things together have a potentiality that is literally infinite.
Okay, if there is nothing to add here, well, I was thinking that it seems like Eastern environment is more like AI startup friendly than Western right now. So maybe for Eastern countries, Eastern like startups, it will be way more efficient to like move in there and start branding their own thing, do something here because of the regulation environment. So last question, I think of this discussion could be the following. So with the startups currently seeking funding, could you have like offer one key strategy or maybe a tip that you believe is super crucial for the success in the current economic climate?
Identify your target investors carefully. Don't just go ahead and cold email 1,000 VCs and hope to do the best. It's not going to work out. Be very niche oriented and build your relationships. Don't just send out an email saying, hey, we're like, this is what we're building. Here's how much we're raising. Let me know if you're interested. Start building out those relationships. They're gonna run you a long mile. That's pretty much it.
And I can wholeheartedly agree with what Ark's saying, and something I thought about coming into this. I think, really understanding one, your market fit, but really two, and I think right now as many people don't, or maybe are not receiving funding right now, but is building those relationships. It doesn't mean you're like speaking with one investor that, it's a yes or no. You really need to build relationships with investors, and walk them through what you're actually doing and building. And whether they have capital or not during the time are willing to put it out. When the market fits in 2024 with the bull run and everything, that's maybe your time to be really selling to investors for, fundraising. But you need to have those long-term relationships, whether that's through, someone like myself or, a friend or a colleague introducing to VCs, but it's really nurturing those relationships and not expecting, that's just going to happen overnight with that one VC that it's going to be yes or no. It's really a long-term process and takes, 6 months to a year to really, build that together in order to really build that trust. And I think that's what's really important these days.
I think just quick thing to add, if you're early stage, go after accelerators. That's your best bet. Yeah. Techstars, 500, maybe that's a bit late. Startup Wise guys, if you're in Europe, things like Pioneer.app. There's many. If reach out to me via Twitter, I'll send you a whole list.
Yeah, and I think pitch and demo days are extremely necessary to really refine your pitch and everything for investors, because if you're just starting to fundraise, your pitch is not going to be as good as it can be. It takes many times. So whether it's demo days or pitch days, if you don't want to do it in front of VCs or just, practicing with other people is just so important.
Yeah, well, amazing. Regarding about accelerators, I'm not a big fan of them. I have been dealing with them for a long time and not a big fan, but obviously it depends who is your team. So what you need to be aware is what are your weaknesses and what are your strengths and so on. If you are more on the business side, maybe you don't need so much an accelerator. If the accelerator is not so big, so we are talking about one of the big top 3 accelerators, so that's another story. But if you are going to an average accelerator and you are a business team, well, you're just losing your time. On the other side, one thing that is really important, I have been said, is relationships. That's something that so important. At the end of the story, what the beauty of Web3 is that it gives you the opportunity to raise money, just leverage the power of community. So the whole point is try to understand what is your customer, what is your target, what they do, and try to build a community. Because if you have a community that is supporting you, first of all, you will get feedback. So on the other side, you will also can get money. Right now, for example, in Swiss, it's already possible to tokenize equity of your startup. So you can start raising money, tokenizing your own equity. So that's something that is opening you a new way of raising money. There is not a single choice and not a single solution, because it depends which is your market, who is your target, what do you want to do, how much money do you require. So, but generally speaking, the key word is being aware, so awareness of what you do and who you are. And the second one is absolutely relationship, because you need to be in a relation with many people, and the better is the relationship, the better you will work.
Yeah, exactly. And let's hear Joshua.
I would give a specific pointer for when you're actually pitching, which is speed up your pitch fast enough that you can slow down your pitch, because there's nothing worse than listening to somebody who's in a room, because they never get across what they're trying to get across. And if they can't do that, then they're never going to find the audience, the person that they're trying to speak to correctly. They're never going to find. Speed it up fast enough that you can slow it down.
Guys, this is the best pitch advice, period.
Yeah, so that's great advice. Yeah.
And actually, they were all amazing pieces of advice. I think we're giving just absolute crazy information out for people. They can already start building just using this convo. So yeah, I have nothing to add actually here. It was a pleasure actually talking to you. Such a nice audience, like best to be working with actually. So yeah, have nothing to add here.
Yes, thank you so much, guys, for your time, for your contribution, and that was really outstanding. And time passed really fast, actually.
Thank you all, guys.
So
Thanks,
you.
Ivan. Thank you, guys, everyone. Really
Yes,
appreciate
have
it.
a nice day, night, and evening.
Cheers.
Bye bye.
Cheers.
Bye-bye.
Bye, guys.